Welcome to the deep dive. Today we're diving into Baidu, the Chinese tech giant. We're specifically looking at their first quarter 2025 performance.
Yeah, and we've got quite a bit to work with here. Analyst reports from TipRanks, Alpha Street, Guru Focus, financial modeling prep.
Plus the official earnings call transcript, a piece from the Economic Times, and Baidu's own PDF release. So plenty of material.
Absolutely. And our goal really is to sift through all that and pull out the core insights for you.
Right, give you a clear picture of where Baidu stands right now, especially with all the buzz around their AI work.
Exactly. And the main story that kind of jumps out when you look at everything is, well, they beat revenue expectations, which is interesting because their traditional ad revenue actually dipped a bit.
Ah, okay, so something else must be pulling the weight then.
Precisely. And that something else is pretty clearly their AI cloud business. It saw some really significant growth.
Gotcha. So we'll be unpacking how that's happening and what it really signals for Baidu's overall strategy. So if you're tracking big tech or AI development or maybe just the Chinese market in general, this should give you some valuable perspective. We'll try to hit those aha moments and keep the jargon kind of manageable.
Sounds good. Where should we start? The big numbers.
Yeah, let's kick off with the headline financials. Lay the groundwork.
Okay, so Q1 2025 revenue came in at $32.45 billion. That's about, what, $4.5 billion US?
And that beat the analysts' predictions, right? They were expecting a bit lower.
Yeah, the consensus was hovering around $30.9 billion, so a decent beat there. And year over year, looking back at Q1 2024's $31.5 billion, it's up about 3%. Not huge, but positive.
Okay, and what about Baidu Core? That's their main engine, right? Search, AI.
Right. Baidu Core revenue actually showed stronger growth, up 7% year over year. That hit $25.5 billion, or roughly $3.5 billion.
So the core is growing faster than the overall company average. Interesting.
Definitely points to where the momentum is. Now, profitability. That's where it gets quite interesting. Net income attributable to Baidu was $7.7 billion. That's over $1 billion US. And that figure was up a massive 42% compared to last year.
Wow, 42%.
Yeah.
That's a significant jump in profit. And earnings per share reflects that too.
Well, yes and no. The diluted earnings per ADS were 21.59 or $2.98. That was up 45% from 14.91 a year earlier. So very strong on that front.
Okay, but I sense a but coming.
Yeah, there's a slight twist. When you look at the adjusted earnings per ADS, it actually went down a bit. It dropped to RMB 18.54, which is $2.55 from RMB 19.91 in Q1 2024.
So GAAP net income way up, but adjusted EPS down slightly. Why the difference usually?
It often comes down to one-off items, stock-based compensation, maybe some other accounting adjustments. It means the underlying sort of operational profit might not have grown quite as dramatically as the main net income figure suggests.
Right, you got to look under the hood sometimes.
Yeah.
Still, overall revenue beat, core revenue up nicely. And you mentioned the AI cloud was the real driver.
Absolutely. That's the standout number, really. Baidu's AI cloud revenue just surged. Depending on which report you read, it's either a 40% year-over-year jump, that's from TipRanks, or 42% according to Baidu themselves and others. Either way, it's huge growth.
42%, that's impressive acceleration. How much revenue does that actually represent?
There's a slight variation there too, interestingly. Guru Focus puts it at $9.4 billion, about $1.3 billion. Baidu's own release says $6.7 billion.
Okay, so maybe different definitions of what's included, but the trend is unmistakably upward, and its contribution to the overall business.
That's the key part. AI Cloud now makes up 26% of Baidu Core revenue.
Wow, up from 20% last year. So more than a quarter of their core business is now AI Cloud.
Exactly. It shows how central it's becoming. CEO Robin Lai really emphasized it on the earnings call. He talked about market recognition for their full-stack AI products and solutions and having a highly competitive price performance advantage.
That full stack idea again. So that's covering everything from basic cloud services to the more advanced AI tools.
Pretty much. Enterprise cloud computing, AI platforms, infrastructure, the whole gamut.
And within that, are specific AI areas growing faster?
Yeah.
Like Gen AI.
Oh, yeah. They specifically called out generative AI and their foundation model-related revenue. That segment saw triple-digit year-over-year growth.
Triple digits. Okay, so the demand for those big, adaptable AI models is really taking off for them.
It certainly seems that way. These foundation models, they're the bedrock for lots of different AI applications.
And this strong AI cloud growth, It helped offset that weakness in advertising you mentioned earlier.
Precisely. Their traditional online ad revenue was down 6% year over year, came in around $17.3 billion or $2.2 billion, according to Guru
So
Focus.
a bit of a dip there, maybe reflecting broader market shifts or competition.
Could be a mix of factors, but yeah, the AI cloud performance more than compensated for that decline.
It's a pretty clear picture of diversification in action then. Shifting reliance away from just ads.
Definitely. And central to that AI push are their ERNIE models, right? What's new
Yep.
there?
Right, Ernie. They've been busy. In March, they rolled out Ernie 4.5. That's their first big multimodal model.
Multimodal meaning it handles more than just text, images, video.
Exactly. Text, images, video, audio. Makes it much more versatile. They also launched Ernie X1, which is focused specifically on, like, complex reasoning.
Okay, pushing the capabilities forward. And I heard something about turbo versions too.
Yeah, just a month later, in April, they announced Ernie 4.5 Turbo and Ernie X1 Turbo. Faster performance, apparently, but the kicker is the price. Significantly lower.
How much lower are we talking?
Get this, Ernie 4.5 Turbo is priced 80% lower than the previous 4.1 version, and Ernie X1 Turbo is half the price of the original X1.
Whoa, 80% and 50% cuts. That's aggressive. How are they managing that?
They credit their sort of unique four-layer AI architecture. Allows for optimization across the board, driving down costs, enables that price-performance advantage they mentioned.
Makes sense. Efficiency gains passed on, and they're planning to open source some of this.
Yes, another big move. They plan to open source the Ernie 4.5 series starting June 30th.
Open sourcing a flagship model. That signals confidence.
You called it technological confidence, yeah. The idea is to make Ernie more accessible, get more developers using it, building on it.
Like building an ecosystem around it. And
Yeah.
they're embracing other open standards too, like MCP.
Right, the Model Context Protocol, trying to make different AI models play nicely together. It's all part of that broader strategy, it seems.
Plus, they highlighted their patent portfolio in AI, especially foundation models and agents, underscoring their R&D muscle.
So powerful models, getting cheaper, becoming more open. How are they helping businesses actually use these models? That's where Key and Fan comes in.
Exactly. Key and Fan is their model as a service, or MaaS, platform. Think of it as a workbench for developers and companies.
Okay, a place to access Ernie and other models?
Yeah, a whole library, their own ERNIE models, plus third-party ones, open source options, focused on being cost-effective. They talk about low inference costs.
Inference being the cost to actually run the model and get results, right?
Precisely. They want to make it cheaper to actually deploy AI.
And they've been upgrading Key on Fan.
Yep. Added a new data builder tool, enhanced the model builder. Importantly, they've extended fine-tuning capabilities to multimodal and reasoning models now.
And something about one-click model distillation. Sounds complicated, but useful.
Yeah, distillation is basically creating smaller, faster versions of big models. Making it one click just lowers the barrier for developers to create more efficient AI apps. It's
Well-
about democratization.
Making complex AI easier to handle. Okay, so that's the platform side. How is this AI actually showing up for regular users, like in Baidu search?
That's where it gets really visible. They're putting AI right into the search results. By April, they said about 35% of mobile search result pages had AI-generated content.
35%. That's up quite a bit from 22% in January, wasn't it?
Yeah, rapid increase. And they expect it to keep climbing.
Is it just more text? Or...
No, that's the interesting part. They're focused on multimodal content. So images, videos, conversational AI agents, digital humans presenting info, even live streaming integrated into results.
Digital humans in search results. That sounds futuristic.
It's happening now. They said AI-generated digital human videos surged over 30 times just from the start of the year to April.
30-fold increase. Wow. Are users liking this stuff?
Seems so. The data they shared suggests users exposed to the AI results are more satisfied, they explore more topics, and they stick around longer. Higher retention.
Positive feedback loop then.
Yeah.
And the main Baidu app user base is still growing.
Yep, hit 724 million monthly active users in March. That's up 7% year over year. So a huge audience for these AI features.
And these agents and digital humans, they're popping up elsewhere in their mobile apps too.
Yeah, across the ecosystem for different tasks. And they're teasing upgraded, hyper-realistic digital humans coming soon. More natural conversations, gestures, making interactions smoother.
Okay, blurring the lines between digital and human interaction. Let's shift gears a bit from the digital world to the physical Apollo Go, their autonomous driving project.
Right, another big AI bet for them. And they're looking beyond China now.
Where are they expanding?
Q1 saw them enter Dubai and Abu Dhabi for autonomous ride-hailing. They've started validation testing on open roads in Dubai. Abu Dhabi's next. Plus, expanding testing in Hong Kong.
So real international moves. How big is their fleet now?
Over 1,000 fully driverless vehicles deployed globally. That's quite a scale.
And ride numbers.
They did 1.4 million rides in Q1 alone. That's up 75% year over year.
75% growth in rides. That's picking up pace.
Definitely. And as of May, they've done over 11 million rides cumulatively. So a lot of real-world miles and data being gathered.
Are they sticking to just ride-hailing or exploring other models?
They mentioned exploring asset-light models, and they've partnered with Syar Inc., big car rental company in China, for autonomous vehicle rentals.
Interesting. So renting out self-driving cars could open up new markets.
Potentially. They also keep highlighting their RT6 vehicle. Purpose-built Level 4 AV, they say, and the unit cost is apparently below $30,000.
Under $30,000. For a purpose-built autonomous vehicle, that sounds really low. Could be a game changer for the economics, if true.
Yeah, that low-cost point is definitely something they emphasize as a competitive advantage.
Okay, so lots of activity on the AI front, strong cloud growth, autonomous expansion. How are the financial analysts reacting to all this? What's the street saying?
It's a bit of a mixed bag, honestly, which isn't totally surprising given the transition they're in. Initially, after the earnings report, their U.S.-listed shares did pop up in pre-market trading. So some positive reaction.
And the overall rating.
The consensus is generally a moderate buy, and the average price target analyst suggests, quite a bit of potential upside over the next year.
But not everyone's convinced. What are the main concerns?
Some analysts are still pointing to that softness in advertising revenue, and there are questions about margins, especially with all the heavy investment Baidu is pouring into AI. It costs money to develop all this stuff.
Right, the R&D and infrastructure costs.
Exactly. But then you have other analysts who are really bullish, focusing on the AI advancements, the cloud growth, the long-term potential of Ernie and Apollo Go.
So a split between focusing on near-term ad pressures and margins versus the long-term AI transformation story.
Pretty much sums it up. It highlights the crossroads Baidu is at.
And how are they balancing that? Where's their money actually going? Capital allocation priorities.
Well, the focus is clearly on fueling that AI growth, investing in AI cloud infrastructure, pushing Ernie models forward, expanding Apollo Go, integrating AI into search. That's where the big strategic bets are.
Makes sense. But are they also looking after shareholders in the meantime?
Seems so. They mentioned continuing their share buyback program. They repurchased $445 million worth of shares just in Q1.
Okay, so returning some capital while still investing heavily in the future. It's a balancing act.
Definitely.
What about competition? It's obviously a crowded space, both in cloud and AI.
Oh, yeah, they acknowledge that. In AI applications, their focus seems to be differentiating through user experience in search, using that multimodal content, shifting from just finding info to actually helping users make decisions with AI agents.
Using their massive search user base as a key advantage. And in robotaxis.
They're highlighting their scale, the 1,000-plus vehicles, the purpose-built RT6 with its low cost, their operational structure, and that global expansion push.
And the partnerships, like with Syar Inc.
Right, showing they're open to collaboration to gain traction.
One last thing, those chip export restrictions. That affects many Chinese tech companies. How does Baidu see that impacting their AI ambitions?
Their stance is basically that their full-stack approach and efficient infrastructure, getting the most out of the GPUs they do have, allows them to keep building strong AI even without the absolute latest, most advanced chips.
So optimization and software can compensate to some extent.
That seems to be their argument. Plus, they pointed to potential from domestically developed chips and software coming down the line, leaning into the local ecosystem.
Interesting. Confidence in their own stack and the domestic alternatives.
So if we try to wrap this all up, what are the main things to take away from this quarter for Baidu?
Well, I mean, it really feels like the AI pivot is not just talk, it's actually happening and delivering results.
Yeah.
That AI cloud growth is impressive, and crucially, it's picking up the slack from the traditional ad business.
Yeah, the numbers back that up.
And their continuous investment in Ernie and CanFan and Apollo Go. It positions them as, a really serious contender in multiple next-gen tech areas. Plus, seeing AI integrated so rapidly into search, 35% of result pages, that feels like a fundamental change in how we might interact with information online moving forward.
Definitely. Which leads to kind of an intriguing thought, doesn't it? When you see them pushing Apollo Go internationally and planning to open source something like Ernie 4.5, how could those moves ripple outwards?
You mean, how might it influence the global AI race or even the future of transport?
Exactly. What new things become possible? What new business models might pop up when these powerful, potentially lower cost AI tools and autonomous systems become more widely available, maybe even globally?
Yeah, that's a big question. What happens when these foundational technologies spread further? It's definitely something to keep an eye on.
For sure.
Well, this has been a fascinating deep dive into Baidu's latest quarter. Lots of moving parts, but a clear direction emerging.
Agreed.
For everyone listening, if you want to dig even deeper, the source reports we mentioned offer a lot more detail. It's worth thinking about what these trends mean for search, cloud, AVs,
Mm.
not just in China, but globally. Thanks for joining us for this deep dive.